We are now witnessing the largest financial giants of the TradFi world coming together to transform a $7.1 trillion industry. And this includes names like Goldman Sachs, BNY, BlackRock, Fidelity, Federated Hermes. And if we actually look at this announcement, we have Goldman Sachs and BNY join forces to transform $7.1 trillion money market industry with tokenized money market funds in collaboration with major asset managers, including BlackRock, Fidelity, and Federated Hermes. This got posted by Bank XRP. And when we think about how crazy this is, okay, think about the connections with Ripple and these types of names, right? Like recently, we just witnessed as BNY announced that they were going to be the prime reserve custodian of Ripple's enterprise-grade stablecoin RLUSD. BNY and Ripple are jointly committed to paving the way for digital asset adoption at institutional scale, and together are helping to bridge the gap between the traditional finance and cryptocurrency ecosystems. This was a huge move. But I'm bringing this up because, when we think about what's happening here, the tokenization boom is not something that we can speculate on anymore. It's not something that we can sit here and say, oh yeah, I think this is going to happen, or oh no, I think that these big players are going to, be a part of this. No, it's no longer, I think. Now it's I know. They are here. It's happening. It's no longer a question. We see it happening in front of us now. And it includes the largest players in the world. We're talking about trillions and trillions of dollars in assets under management. We've talked about it, right? BNY alone has $50 trillion in assets. BlackRock has 10 trillion plus in assets. These are massive names that are household names in the traditional financial world. But on top of all of this, right, to really kind of dive into the details behind this, Matthew Lin Y put out a great post. We have Bank Mellon tokenized money market funds will use BM Liquidity Direct blockchain. Goldman Sachs, BlackRock, Fidelity, Dreyfus, Federated Hermes, all working together. And here we actually have the images of how this works. So this is through Liquidity Direct tokenized money market funds. They just break it down on exactly what they are. They're, money market funds. They're tokenized money market funds, essentially. But this is all integrated with BNY digital assets. And this is how it works. So for phase one, clients and fund companies will interact with Liquidity Direct in a manner that they do today to also invest in and or redeem tokenized share classes via Liquidity Direct, which will have mirrored copies on the blockchain via the GS DApp. Liquidity Direct's blockchain connectivity layer managed by BNY's digital asset platform, BNY DApp, consumes mirrored information from Liquidity Direct and provides that through BNY DApp onto a blockchain platform that can be internal or from a third party. Highlight that third party because that means that any major blockchain platform can be tapped in, which includes even the XRP ledger. In phase one, this will be a private permission third-party blockchain platform, the GS DApp. BNY will be the shareholder servicer and custodian for money market funds, while also taking on a new role of tokenization manager responsible for triggering the minting and burning of tokens that mirror money market funds on BNY's books and records. And by the way, yes, it all starts with private first, and then we start to see public blockchains being tapped in. But we could see how this would work on the right side. And this is some big names, some of the largest players out there. And here we also have the names just to kind of zoom in on them. And then also over here, this is how it works. This is what I just read. So when we think about, how significant this is, this shows us that these big players are building. They're here. They're tapping in. And that third party idea there, right? Like the fact that a third party blockchain platform can be tapped in should prove to you that we are going to see multiple names being tied to this, multiple public blockchains as well. But what's crazier about all of this is over here from June 26th, big shout out to Subjective Views for this. We have Goldman Sachs interviewing the top G, Brad Garlinghouse, conversation with Ripple. Yeah, this happened back in the end of June, and this was at a digital assets conference. And here we have, and let me actually open this up in a new tab real quick and just zoom in so that you can see her name. We can see that she is a partner in investment banking, TMT, at Goldman Sachs. And of course, this was with Brad Garlinghouse. It's very interesting, right? It's very interesting that we are, starting to see some of these connections now rising at a time where we're also seeing these big players diving on deep into, big tokenization moves. And what's crazy about this is Goldman Sachs and now BNY have major connections back to Ripple. And even over here, we have from Smoke Dog, big shout to Smoke Dog for this, Goldman Sachs, co-investor of Ripple, documented. And here we actually have Ripple, a new technological approach to interbank cross-border financial transfers created in 2005. Co-investors include Google, Goldman Sachs, Standard Chartered, Banco Santander. Yeah, these are big players. Works in test mode with more than 100 banks, including Santander, Bank of America, Axis Bank, Standard Chartered, etc. Unlimited scalability. It is designed to improve existing payment technologies by accelerating exchange operations and facilitating the trade of low liquid assets. All of these players have been connected back to Ripple. It's, again, the reason why I say that Ripple is at the center of almost every conversation happening from these massive, giants. And it should tell you exactly where we're headed. Now, on top of that, stablecoins. So I've been talking about stablecoins for quite some time. Okay, and why are stablecoins important? Why am I bringing them back up? Right? Nothing we talked about includes stablecoins. Well, because if we think about tokenization, if we think about money market funds or anything that's getting brought on chain, it goes back to ROUSD. Okay? I said that stablecoins are simply the oil for the engine to run. They are the liquidity to enable every asset class and market in the world to move on chain. Stablecoins are simply step 2. Step 1 was custody, and step 3 is integration. Now, a few people will say, all right, well, that means that there's no need for XRP or for this altcoin or for that altcoin. I want you guys to realize that stablecoins are not acting in a sense of like XRP when it comes to liquidity on demand or anything like that. What I mean by stablecoins being the oil here is that just as though fiat is the tool to trade, buy, sell, swap, whatever around stocks, bonds, real estate, you name it, stablecoins are that for the on-chain tokenized future. Stablecoins enable all of it just along with custody. I remember that there was a video clip from Ripple, actually, I believe it was an individual from Ripple, where they said that custody actually enables every other use case for big banks. And it was at a time where they just acquired Medico. So yeah, custody enabled these types of use cases. Stablecoins actually allow for these things to happen at scale because you don't get anything at scale on chain or regardless, even outside of crypto, without proper liquidity. Liquidity is the thing that needs to be there for any of these types of things to actually, live on chain or live on, a platform that you can buy, sell, and trade and swap things or even borrow against or lend, So when we think about this, everything that we're talking about when it comes to tokenization or, payments and things like that, stablecoins definitely are at the height of the list. But when we think about this as well, I'm mainly looking at how these markets are moving on chain. Money market funds are now being disrupted at the same exact time that the DTCC is also tapped in a big way. Here we also have, watch, this is a small fraction of what's at stake. The DTCC is just one of the many CSDs globally. They are the record keepers for quadrillions of dollars of transactions and are currently working towards tokenizing approximately $100 trillion of assets. Check this out.
The CEO, Frank LaSalle, and the board had foresight that, hey, this is a disruptive technology that can fundamentally change the way we do business. We need to harness it, that technology. So they acquired Securrency not as the only technology, but as a foundation, especially a foundation for how you do regulated assets on which we could blend together the other technologies, distributed ledgers, smart contract frameworks, tokenization frameworks, to create a coherent marketplace. So they were forward leaning in that model. As I mentioned to you, the one right to win that DTCC has in this model is we are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else. We can actually make it possible to tokenize $100 trillion worth of value. No one else can do that efficiently. So we have both a right and a responsibility to do that effectively for the financial markets, because it unlocks so much among those things that it unlocks. So we're building out those rails to do that, to make it so that parties can, within seconds, convert any traditional holding into token form to conduct transactions.
Now, they're doing this right now. This is, again, the DTCC, one of the largest players in traditional finance. Yeah, they are record keepers for quadrillions of dollars. They actually settle quadrillions of dollars worth of securities transactions per year. But on top of this, right, we think about Hidden Road, right? Hidden Road is tied back to the DTCC as well. Here we actually have that document of Hidden Road applying. Well, it's not even an application. This is Hidden Road becoming a partner of the DTCCs back in March of this year. New participant in the netting system of the Government Securities Division of the FICC, Hidden Road Partners CIV US LLC. Now, what's even crazier about this is that the DTCC doubled down. Here we have Dan Dhoni of the DTCC speaking on moving $100 trillion worth of assets on the blockchain. This is to complement this video. Check it out.
This example with real world assets, this is now a very real disruptive force to traditional finance. And for example, in our case, our focus right now is bringing $100 trillion worth of assets the DTCC is responsible for on chain. Many folks here may not know who DTCC is and what we're responsible for. We're the principal record keeper for the U.S. financial markets. So we are all publicly traded securities. We hold a principal record keeping role. We're responsible for T+1 settlement. We're owned by the major banks and institutions. So effectively, we're a DAO for the U.S. financial markets. We're determined T+1 settlement is not good enough. We're really looking to take advantage of real-time settlement from blockchain rails, and it's our responsibility to bring those assets into the market. This example with real-world assets.
And yeah, I mean, listen, when we think about these types of names, the DTCC or BNY Mellon or BlackRock and Fidelity, like these are enablers, right? These are big players that when they make a move, everyone listens, everyone watches. And guess what? They also follow along. And we also know that the DTCC patent named Ripple, XRP, and even Stellar XLM for tokenized settlement. This got posted from Generation Infinity back in May. The newly uncovered infrastructure blueprint reveals cross-chain routing for digital liquidity tokens. The DTCC settles $2+ quadrillion per year. It's now at almost $4 quadrillion. They already provided us with the full patent link as well. King Solomon did do a full video breakdown on the actual patent itself. I believe that this is the patent. Yeah, this is the patent itself. And what's crazy about this is, you know, people will continue to ignore the signs, right? The signs that we are headed into a tokenized digital economy where it's not just trillions of dollars, right? It's much larger than that. And again, will it take time to get to those larger amounts? 100%. But I could tell you right now, trillions of dollars are just sitting on standby, waiting for regulations, waiting for the green light. And once we get that market structure bill, I believe that we are going to see a massive amount of capital hitting these networks. And this is where we start to really move ahead in terms of this technological advancement. And crypto is going to be, in my opinion, one of the largest things that we have as retail investors to really put our money into, right? Like there's nothing even close to it. You might say, all right, well, what about stocks? Can't we just invest in the stocks? Well, stocks are you investing into a company's performance. How good was their quarter? You know, did they, sell enough? Did they break even? What was the case? This is technology. This is technology that these companies that were thinking about stocks, right? We're thinking about investing into stocks. These companies are going to utilize this technology. The big banks are going to utilize this technology. The asset managers are using this technology. Stocks are going to be tokenized. Asset classes will be tokenized. Everything around us that has value will be tokenized. So when we think about what's happening here as retail investors, this is the largest thing that we can actually put our money into. And in the coming years, I'm telling you guys right now, this revolution around this technology is only going to become bigger and bigger and bigger as more and more money trickles in. So with that being said, I hope that you guys enjoyed this video. If you guys did, leave a like, subscribe, notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.